What's up, everyone? Long time no see. Yeah, long stream today. My brain is still fried, but we had a good day. Alright, so. Oh, yeah, I had it playing in the background. So today we're going to be going over my take on turtle soups. Now, a few disclaimers we're going to start with. I don't think it's the be-all, end-all. I don't think I know everything, or this is the only way to turtle soup, or I'm just sharing with you everything I share with my trading models, no matter if it's turtle soup models, time-based models, anything like that. It's my own take, okay? There's just things that I have, built, traded, back-tested, etc. over many, many days of trading, and this is just my take on it. So there's lots of ways to trade the market. Everybody knows that, right? There's no right way or wrong way of models, right? It's all comes down to your execution, your trade management, your risk management, and your psychology. Okay, so that being said, there are going to be elements of different things that I'll be sharing today, of different models. If you guys want to learn, deeper into those models, I have mentorship videos on them. Today, I'm just going to focus specifically on turtle soups. Now, there will be times I'm going to mention like DTT times, but keep in mind I'm not teaching DTT. Okay, I'm not here to teach DTT. DTT, I have made like hybrid models around it, and kind of like integrated it with my other models. So the roots do come into play based off turtle soups, and then same with quarterly theory. I do not trade quarterly theory. I trade a modified version, a heavily modified version of quarterly theory, but that does come into play with these models. So just basically say all that to say that, this is just my take. So maybe there's something that you can learn today that you can bring to your toolbox. I do trade turtle soup as a primary model. I probably trade it on a majority of my trades. For those that are in Kingline and they trade with me live, these are trades that I take pretty much every day, live on screen, with these models I'm about to teach you. I started studying DTT when I actually tried to put Ivan and Anar on the map a little bit. They're great people. I found them on X back when they were first starting out, like sharing this stuff, and dove into it and started chatting with them. Really classy guys. And so I began studying it myself and like going and studying it, reverse engineering it, and incorporating it into the models I already trade. So I started making like hybrid type models with DTT roots. So I kind of I trade them a little bit different than like that's why I said I don't trade DTT how it's exactly how the DTT models are. I've kind of integrated it into my own models. But yeah, DTT is amazing. Ivan and Anar are great dudes. So shout out to them for the DTT roots. I've definitely incorporated them into a lot of my trading, no doubt about it. So turtle soup. Now, when we're talking turtle soup, essentially what a turtle soup is just like a false breakout, right? Now, a false breakout could be a false breakout of a high or a low, or it could be a false breakout of a time level. Okay, so the turtle soup that you're probably used to seeing is just off highs and lows. So it goes a lot deeper than that. There's very specific time levels paired with specific PD arrays that offer the most high probable turtle soups. You don't want to just take any high or low and soup it, right? You also don't want to soup a time level at any given time just randomly. There needs to be multiple points of confluence to make a turtle soup, high probable. Now, does that mean you have to take this turtle soup trade? Does that mean that's the only way to get in the market? Absolutely not. So you could, based off what we go through today, and you see a turtle soup signature with the models I'm about to teach you, you don't have to take that. If you don't feel comfortable taking the turtle soup, because they are, they could be aggressive, right? Because you're literally buying an up close candle, or you're selling an up close candle or buying a down close candle, right? Alternatively, you could just wait to see that signature happen and get in on like a 2022 model, or inverse for value gap, or order block, or whatever it might be that you want to get in on, right? And I'll be sharing those entry models for you guys too. You can keep them and study them as well. So first thing first, if you guys want to take notes, you can, but I'm gonna delete this. Yeah, I'll put this up here. So before we even get into the charts, and this will be recorded, by the way, so if you have to bounce or whatever, I'll save the video for you guys. And if you guys have questions while I'm going through this stuff, please feel free to throw them in the chat. I'm more than happy to answer all your questions. At the very end, I'll answer more questions too. Oh, Greg, sorry, I just missed your question. What artist? Oh, that was Hermanos Gutierrez, one of my favorite bands. A lot of good music. Okay, so let's see here. How do I type the artist? It's this. Highly recommend. Okay. No, you're good, man. So the best turtle soups happen after we're delivering from a higher time frame PD array. Okay, so that's kind of like step one that you need to pick up on the market structure itself on order flow, right? So are we delivering from a higher time frame PD array? When I say higher time frame PD array, I'm talking 15-minute, 1 hour, 4 hour, okay? And then we get a manipulation move into a time level paired with a lower time frame PD array, okay? And we'll go through this on the chart, so this will make more sense. And these soups can be at any key time levels, including TMSO. Okay, so the key time levels that we're going to talk about today midnight open New York, okay? Midnight open New York. I call that king of the charts because midnight open New York offers the best turtle soups, hands down, okay? Especially when you pair it with, like I said, delivering from a higher time frame PD array. You're going to find your best turtle soups happen at midnight open New York. And second best will be NYO, which is 7:30 a.m. New York. I would call that, I don't know, queen of the charts. So New York open, 7:30 a.m. time level. You would want to draw that line out, okay? And same with midnight open. You want to draw that line out. These two dictate order flow and offer a lot of really high quality and high probable turtle soups. They can also act as pivot levels for your bias as well, especially when they are paired with like a 5-minute or 15-minute PD array. Like if that 5 or 15-minute PD array gets inversed with these nestled in it, they become really high probable turtle soups. Next in line, we have some DTT roots. 953, 1034, 1235. So there's more DTT roots than this, but for turtle soups, these are the ones I use for turtle soups when paired with PD arrays as well. No 830 for me, gap trader. Doesn't mean that that won't work. Now there's a high probable turtle soup within that window because we have 830 news, right? So that window during 8:30, yeah, that's going to usually offer a turtle soup. So I guess I see what you're saying there. However, trading that turtle soup is extremely difficult, right? Yeah, these are all New York times. Everything here is Eastern, okay? So anytime I give you a time level, you want to take the opening price, okay? So these are opening prices. And if I make typos, guys, just, I'm trying to be a trader of the year, not like grammar teacher of the year. So I make a lot of typos. Okay, So these are all opening prices. So you take the opening price of the candle and you draw it out and you extend it out. Okay, so like this from the opening of the candle. Okay, it goes for all the time levels. Okay, and then next we have PMO, which is 1:30 p.m. in the afternoon, New York. Okay. So this is a very high probable turtle soup level as well. So these are all the time levels that I use for turtle soups. Okay. So these all are going to come into play into almost every turtle soup I take. Again, paired. I guess you can even use a 1, 5, or 15-minute PD array. Now, the outlier is TMSO. So a lot of you may not be familiar with TMSO. It is a part of quarterly theory. Again, I don't trade quarterly theory. I found it to not be very accurate. I found it to be not reliable. However, there are elements within quarterly theory that if you use them in a different way are very, very powerful. TMSO is one of them, and that's the Q2 opening price of each 90-minute cycle. Now, if you're in Kingline, we have an indicator that plots all this for you, plots all these levels. If you're not in Kingline, you can find an indicator called, let's see, quarterly cycles. That will plot your TMSO for you automatically. Again, I edit this indicator quite extensively because I don't really trade quarterly theory. Q2 is part of quarterly theory. So every 90 minutes you have 4, you can break that up into 4 quarters. Again, I don't trade it this way, but just this is how you get the Q2. And Q2 is the second quarter of that. Well, the opening candle is TMSO. Okay. So if you want to see my settings, oops, I'll put them off to the side here. So when I have this indicator up, I have TDO, which is midnight, and then TMSO will automatically plot, and I don't use any of these quarters other than Q3, so we'll go through that. Okay, so these right here, if you want to screenshot that or write these down, this is really worth your time to back test it and even just watch this happen live, okay, in the market. Again, you don't even have to trade these right away. You can just start observing and just seeing how price acts based off what I'm showing you, okay? So these are really important key time levels. So now that we have all this information, we can start digging into the charts, okay? So has everybody got that? We know what we're looking for. This is going to make a lot more sense now once we go through the charts, now that you've seen this. Okay. Okay, we'll just go through today. Today it's easy. It's here. Okay. So first, let's go over the first. What did we talk about right off the bat? The best soups happen after we're delivering from a higher time frame PD array, right? What is higher time frame PD array for me? 1 hour, 4 hour, 15 minute. Okay. So let's check out the 1 hour. So this morning, okay, I'm gonna just assume everybody got all this. I'm gonna delete it. So it's just gonna be out of the way. Okay. Okay, so this was this morning, right? Now if we look at this structure here, where is price delivering from right now? So if we look at this structure, where's the displacement that was made? It was made here, right? This 1 hour, yes, exactly, Nike. This 1 hour CIBI, okay? So yesterday at 1 p.m. we came up into that 1 hour SIBI, right? We rejected it. So going in here Thursday morning, we can look back and say, okay, this 1 hour SIBI, that's where price is delivering from at the moment, right? So knowing that information going into today, going into Thursday, we can expect, let's go down to the 5 minute. Okay, so before the market even opened, what do we have here? Okay, so this is your New York Open. Okay, this is that level I was telling you about, 7:30 a.m. Right. So you can see right here, we have it in the back of our minds, right? We're delivering from the 1 hour SIBI, correct? So now we bring the time frame down to the 5. Okay, we mark this out. Now here's your 5 minute PD array. Now you can see right off the bat, at 8:30 a.m. that 8:30 a.m. that 5 minute PD array was made, that SIBI. We come up, New York Open rejects it, right? So now we're delivering from this 5 minute. So what I can be expecting now, until this 5 minute is inversed, until this becomes invalidated, I can expect moves to the upside to key time levels to be manipulation moves, right? Now does this mean I can't take longs? No, absolutely not. However, it just means that you can have some really nice high probable turtle soups knowing this information on moves up into key time levels, okay? So let's break it down. Let's go down to the 1 minute now. So if you're marking out these levels I'm telling you about, okay, so you have your New York Open right here. Let's make it a thicker line so it just stands out, right? Now, do we have a PD array that's nestled? When I say the word nestled, it just means, is there a PD array sitting right next to or inside this time level? The key to turtle soups, it's all about time levels paired with PD arrays, okay? So we have this 5 minute SIBI, yep. And then we also, what do we have? We also have a 1 minute SIBI here, right? So you get the market to open, we come up. Again, I'm expecting bearish price action until price tells me otherwise. Until it tells me that this 5 minute SIBI is no longer valid, right? So it has to prove me wrong, right, for me to turn bullish, okay? Yes, it's recorded, for sure. So if you have to bounce out, no worries. I'll save it for you guys. Okay, so if we're coming up here, right at market open, what do we get? Yeah, turtle soup is a false breakout. False breakout of a high or a low, or a time level. Okay, time is everything with turtle soups. You can't have high probable turtle soups without time and time levels. Okay, so let's, based off the information we already talked about, here's your first high probable turtle soup right off the bat. New York Open, 7:30 a.m., right? Now, if you guys want to go down a rabbit hole, take your 7:30 a.m. open price to just go pick any random day, okay? Same with midnight, any random day, and watch what price does with New York Open, okay? It's a high probable pivot level, turtle soup level, and midnight and New York Open tend to play off each other. They tend to kind of ping pong, okay, until one breaks. So anyway, we come up here, so there's your high probable turtle soup. Now, we have this 1 minute SIBI you can use, okay? Anytime you have that time level nestled with that PD array, and you're delivering from a higher time frame PD array in that same direction, this you can treat as manipulation, and then there's your soup. Now, you can take this. Now, where would you put your stop? Well, there's a couple ways you can do it. You can put it over a swing high. I personally use the lower time frame PD array as a invalidation point. So if this comes up and I take my short here, I'm not shorting here, I'm not shorting here, I'm shorting here, okay? I'm taking the soup right at the key time level because it's paired with this PD array, okay? And also, we have the 5 minute SIBI as well, right? Kind of gives us that additional confluence. So when I see this, you can take this, and my stop could be, if we inverse this 1 minute PD array, that tells me that I'm probably wrong and that this won't soup, right? So if we inverse this, I can bounce. Yeah, it is. You take it as a unicorn. Order block. Yeah, there's lots of different confluences you can add to it. I personally just use key time level, key PD array, Okay. So cryptic, it can. So that's a whole deeper level. That's when we go into time intervals, right? No, so Mike, there is an option you can do that. So I like to soup the key level itself. Now let's say, okay, I don't feel comfortable taking the short on this, because in real time this candle right here is an aggressive push up. This is a big green candle, right? It doesn't have the wick yet. So in real time, this candle, you're literally shorting strength, right? Now it seems counterintuitive. However, when you put the time pieces and the puzzle together, knowing that we're delivering from the 1 hour SIBI, we have this 5 minute SIBI plus the 1 minute SIBI all nestled together, and you trust the model that New York Open, when paired with these levels, would be high probable soup. Now nothing's guaranteed in trading. Nothing. You can have the most high probable models ever, and things can just not work. That's why we manage risk, right? Always manage risk. Risk management's key above everything else. So you don't want to just like full port your soup here, right? However, you take a manageable size, manageable risk. You have decent risk here to use this SIBI, right? Now let's say you didn't want to take that, like what Mike was just saying. Okay, well, we get this price signature. You can wait for your entry model. So let's say you like to do like an inverse fair value gap entry model. Do you get one here? No, don't get one here. What happens? We come back up. So let's say you would have taken that, probably would have gotten stop break even. Okay, comes back up, it soups again. Same level, continues to hold, continues to soup. You can take an inverse fair value gap, right? Because you notice that's the signature of New York Open rejecting, nestled inside these PD arrays, right? In line with higher time frame order flow. Correct, gap trader, correct. So totally nice risk reward, right? So even if you don't take the soup itself, you can find an entry model. Another entry model could be a 2022 model. Didn't get that opportunity here, right? At least not yet. It came later, but so that's an option there, right? So then we come down. Now here we have New York Midnight Open. Okay, so let's say you take this soup. You can target midnight. We break below midnight. That's great. Okay, let's say you caught a nice short here, right? Now, keeping the key level, I'm going to just draw this out just to make it more apparent here. Let's just observe and see what price does, okay? Okay, so we got that soup there at New York Open. Now, before we go into any of the DTT root soups, let's just look at midnight, okay? Again, we're assuming that order flow is bearish until what? What tells me order flow is no longer bearish, in my eyes anyway, based off what I told you guys? Does anybody remember? What PD array is telling me that I'm going to remain bearish until it proves me wrong? Yes, this 5 minute SIBI, right? Nestled with New York Open, right? So while we still have this holding, I'm going to assume and treat moves to the upside as manipulation moves for now, okay? So when we get that, we have New York Midnight Open, which is king of the charts. Okay, so there's our Midnight Open, right? So this move up into New York Midnight, right here, we didn't quite get up to it, right? So this wouldn't have offered, the traditional turtle soup, right? Do you change as the new 5 minute SIBI is made? Go bullish. It could be temporarily for a scalp, Rainy, but I I still would be expecting lower prices until this is lost. This is lost, then I can start thinking I can soup longs now, more aggressively. Right now I'm looking for more short soups, okay? So we have New York Midnight Open. We notice that price comes real close to it, does reject, comes down. We can get into these later. Okay, now we're coming back up. Now look what happens here. New York Midnight Open, order flow is still bearish. Order flow is bearish. We can use New York Midnight Open. You could have taken it here. Didn't quite get there, right? So you didn't quite get that opportunity, but you get another chance, right? Again, king of the charts, New York Midnight Open, order flow is still bearish. Look what happens here, okay? Price comes up, it soups New York Midnight Open. Now, do we have a PD array nestled with New York Midnight Open as well that we could use for a stop loss? Let's just get rid of the 5, okay? There you go. So you have your 1 minute PD array nestled with New York Midnight Open, knowing that order flow is still bearish at the moment. You know, higher time frame order flow anyway. You get your turtle soup opportunity right here, okay? Again, stop could be, you know, it's up to you and your risk tolerance, but it could be a close, a candle body close over New York Midnight Open, or an inverse of this 1 minute PD array nestled with New York Midnight Open, right? So these are signatures that, you know, I really invite you to backtest and throw up on your charts. Just pull up any random day you want. Mark out your New York Open 7:30 a.m. opening price, and mark out your New York Midnight Open opening price, and see if you can find what I'm talking about. Okay. Now, DTT routes offer very similar opportunities. Okay, so I'll kind of go through these as well. Now, this can be a little bit more tricky based off, you know, the order flow, because you can treat these more as scalps. Okay, but the 953 candle is a very high quality route to look for turtle soups. Now, again, even if higher time frame order flow is bearish, mic got cut out. Can you guys hear me? Everybody good? Okay, cool. Sweet. So even if order flow is bearish, we can still take longs, right? Because there's signatures that we can look for. Again, I'm not going to teach DTT because I trade DTT a little bit different. And it's, you know, if you want to learn DTT, I recommend, you know, checking out the DTT book. But when you have 953 getting closed back above like this, right? 1034 you also have nestled right here. You can observe price. Now, we have this 1034 route, this 953 route here, right? They've been displaced back above here. Notice how price continues to hold the bodies of these routes, right? So when I'm seeing this signature right here, then I can think that, okay, any moves down into these routes, as long as this is still holding, we can potentially reprice back up to midnight, because we never repriced it here, right? We didn't reprice it yet. We came really close, but we didn't reprice it yet. Okay, so any moves down into this, you could also treat as potential turtle soups using any type of PD array that can give you invalidation. You know, I like to use inverses around the routes. You know, I teach this to Kingline. This is one of my favorite signatures, is using an inverse fair value gap nestled with the routes. Okay. So when you have something like this, you know, there's plenty of nice opportunities here to take these soups. Okay. As you can see, 953 and 1034 continue to offer those nice soups there. And we go through some of the live executions I'll show you. You'll really see that. Now, fix this. We also have things like TMSO, like I was talking about. You know, TMSO offers these soups as well. Going in through the rest of the day, 1034, 953, you can continue to keep on your charts and utilize those as turtle soup levels. But one of my favorites is PM Open. Okay, so PM Open is that 130 opening price. And oftentimes you guys can use PM Open as a order flow gauge as well. Okay, it's sort of like a pivot level. So if PM Open prints and we close below it, okay, we can treat, you know, moves back up into it. We took this short here inside, you know, on live stream. We see we instantly close below PM Open, come back up. What do? Key time level here, right? This is the signature that you'll see very often in the charts with PM Open. Break above or break below, and a retest of it, you know, essentially souping that level. It's a very high probable turtle soup. Okay, again, if you don't feel comfortable taking that, the push up into it, you can wait, and you can use a 2022 model, inverse fair value gap, you know, any entry model you want, right? You know, you can just use a regular fair value gap, after you spot the signature, right? Now, as you can see, price also, when we determine that order flow is bearish here, this is the soup that we took on stream. Okay, we come back up, 953 level here. It's important to keep these levels on your chart. We already have this signature telling us that order flow is likely wanting to go lower because of the PM open turtle soup. Now you have this, you got 1034 marked out, you have 953 marked out. If you miss this move and you still think price is bearish and you still think there's more sell side to be taken, these are all really nice turtle soup opportunities, and as you can see, they continue to work, right? So we got the 953 route, 1034 route, PM open, all offering really nice turtle soups. Key point being in line with higher time frame order flow, right? Same goes for midnight. Same goes for New York open. So these are all signatures you can dig into the charts and see time and time again that will continue to present themselves. Okay. And there's, like I said, TMSO is often you can use TMSO as like a continuation type trade. Okay. So TMSO, you get like a close below it, an aggressive close below it. Now when I say close above or close below, I use whatever candle closes through that time level. I need at least 50% of that candle's body to close above or below it. Okay. So I wouldn't count this, for example, as a close above, because 50% of this body right here is right here, right? So this I wouldn't count as a close above, right? However, I would count this right here, this candle, as a close below. Now, as long as I'm in line with the draw on liquidity, the lower time or higher time frame draw on liquidity, TMSO offers a lot of nice continuation turtle soups. As we can see here, right? Just like that. And you can go through your charts and see these, like I said, time and time again, any day you want. Now you have to be in line with higher time frame order flow as well. It's just like yesterday. Same thing yesterday, PM open. We reject this higher time frame PD ray. We get a candle body to close back below PM open. And now it offers a high probable turtle soup to keep price continuing lower, right? Where was midnight? I don't think I have midnight marked out on yesterday. Where'd my indicators go? I lost my indicator. There we go. Yeah, here it was. Okay, right here. Same thing from yesterday. New York midnight open right here. What do we have? You got these PD arrays that are nestled within it, right? So you could have taken this as like a... in fact, we took this on stream. The soup at the midnight level there. And these could even be treated as scalps, into PD arrays. Like that. Let's see, where was... Alright, this is another one we took on stream. When we finally got that close back above New York open. This is New York open here. During the 1150 macro, we took that turtle soup. But as long as you're in line with the higher time frame order flow, you can get very, very high quality, turtle soups on these time levels. TMSO, just like that. So what I want to show you let's go through some actual executions here. Okay, so this was a soup. I didn't have my PD rays marked out on the side, so it doesn't show it really well. Let's go to the yellow one. That one was a nice one, but okay. Okay, when we see price engineering liquidity like this, this is also a very key component of turtle soups. We have low resistance liquidity above, right? This is a 5-minute PD array that I have marked out here. And we have these equal lows, right? So price comes down, takes these equal lows. I'm telling everybody on stream I'm expecting some sort of turtle soup to happen here because we have the 1235 DTT route I can use as a floor, the 5-minute PD array I could use as a floor, and I could use this 1-minute PD array right here nestled with the 1235 to use as a stop loss. Okay, so if I come in here and take this was a trade I took. So you can see I enter there using these PD arrays as my floor and my confluence, and I expect price to, you know, soup these lows and at the worst case come down to 1235 to then come up and run this liquidity.
Right.
Okay. Which we end up doing there. So again, it's not just any random lows, right? I'm taking this turtle soup based off of this 5-minute PD array. And as you can see, I had a buy limit down here as well, in case it did want to come soup down to 1235, right? And I also have liquidity that I can target to run here, right? Without that liquidity to target, I don't really have any high confluence for the soup, right? So it's really important that we have that. Now what happens if you miss this soup here? You know, you can use TMSO, right? That could be your second entry there. And you want to take it up and attempt to run all the LRLR there, right? You know, same thing with if you want to see a TMSO soup. Here we have a 1-minute PD array above these highs. I'm expecting this LRLR here to get ran. LRLR is a very high probable target for turtle soups because as long as you're in line with the draw on liquidity and you have a PD array lined up with a high and you have LRLR to target, these can be high probable soups. So I took this as a TMSO soup, so taking a sell above TMSO, expecting to run this LRLR using this 1-minute PD array as my stop loss, right? So we end up getting that. And it does end up running all the LRLR, right? So do you see the framework? You can also use turtle soups as a way to
Alright, I'm gonna try this.
pyramid, okay? So let me just, so this was a PMO, so do we see PM open here? That's the 1:30 p.m. opening price, right? Again, what is the theme here? LRLR. Price comes up, rejects PM open. This was a soup I did not take PM open, but I watched and saw the signature, right? So after I see the signature of that 1:30 p.m. opening price reject, I now have the confidence to take the sell, right? To run this LRLR, right? And as you can see, price ends up running the LRLR. Based off what signature? The 1:30 p.m. open, showing rejections, right? Paired with this LRLR. Okay. Another example. 1-minute and 5-minute PD array right here. LRLR below. Okay. Now this is a 1202 DTT route. I'm attempting to soup. I'm expecting this. Like on stream, I'm telling everybody, I'm expecting price to pop up somewhere in this area. I grabbed an early short here, you know, willing to add. Yes, pairing with the LRLR like this creates a really nice high probable turtle soup. And as you can see, what do I have marked out right here? The 1-minute PD array, right? Nestled up here. What signature am I also seeing with 1202? Rejection, 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 right? Over and over again. And I have this PD array, which is also a 5-minute. There's a 5-minute here and a 1-minute. I have that. Okay. So I see price, so I see that soup happen, so that's when I do my add. And now my stop loss is inversing that 1 minute, right? So it comes up, soups that. Now what else do we have here? PM opening price, right? 1:30 p.m. Again, we want to see price reject, hold that PD array, and then run the LR below, right?
31.
Which we end up doing. So the key component to, yeah, for sure, Greg. The key component to turtle soups. Okay, today I had a lot of time distortion, right? So we did have this nice midnight soup with the LR. That was nice, just like the examples I just showed, right? This is all LR here. Midnight open turtle soup to run that LR. Same with this PM open, you know, run this liquidity here. But the key component to these soups, there's a very common theme that you need to understand, and that it's a time level nestled with the PD array, also in line with higher time frame order flow. Or if you're going against higher time frame order flow, you want to have some sort of liquidity that you're targeting. You know, low resistance liquidity, you know, highs and lows. You can also use these time levels as targets, right? Oh no, rookie, I'll take them at any time. At any time. As long as it aligns, like I said, with my model of turtle soup. So again, time level nestled with a PD array, and a reason for it to go lower if I'm shorting. You know, vice versa for longs. But I can't stress enough to mark out those opening prices: 7:30 a.m. New York midnight open, 1:30 p.m. DTT routes of 9:53, 10:34, 12:35. And if you want to get, you know, a little more technical, you can throw TMSO on your chart. Yeah, the PD array nestled with the time level is one of the most important factors, because for a couple reasons. One, it gives you confluence that you have a reason for price to also reject, you know, not just the time level it's on its own, but also the PD array. Secondly, because you have the ability to manage your risk, right? Because if we lose this PD array, I'm wrong. I'm likely wrong, right? So when I say PD array, I'm essentially just, the PD arrays I use the most are just fair value gaps and inverse fair value gaps, okay? Nestled with time levels. Now you can use breakers, order blocks, things like that. You know, a lot of people do. I personally just use fair value gap nestled with time, and inverse fair value gap nestled with time. Okay, for again, two reasons: it offers a rejection possibility, high confluence, and also it helps you manage your risk, knowing if you're wrong, right? When to stop out. So fair value gap is just a 3-candle pattern essentially. I mean, I have classes on that, but 4-hour opens, driving the distribution points, then use the creation of the candle line. Yeah, you can totally do that, Tommy. Yeah, that's doable. That's a way to do it as well. 4-hour opens can be used the same way. I just found, you know, I've been trading for 8 years. You know, probably the last like 3.5 years, extensively using midnight open, New York open, and then, you know, within the past year, adding DTT to the mix. But yeah, these New York open and midnight open, they offer some of the cleanest, most high probable turtle soups. Yeah, you can use any of the DTT routes, Bluey, for soups. But the most high probable ones paired with time and PD arrays are going to be the 9:53, 10:34, 12:35. Thanks, Tommy. Wherever there's an order block, there is a fair value gap. The best fair value gaps have an order block. Yeah, the best imbalances will have an order block paired with them. I don't trade order blocks myself, but that is a signature that you'll tend to see. Is if you have an order block with a fair value gap. Yeah, inverse fair value gap. So inverse fair value gap, you have to be careful. Like you can find inverses all over the chart, right? But you want to be careful. You want to use inverse fair value gap when you're delivering from a key level, right? just like this. So, like this inverse right here was delivering from this rejection, right? So without this rejection, this doesn't become a high probable inverse to me. But now that we have this rejection of the New York Open 7:30 a.m. price, now this becomes a high probable inverse for value gap, because now there's a thesis behind it, right? There's a reason for this inverse to actually be used as an entry model, which we get this inverse, right, created with this candle, and then here's your retest into that inverse using the confluence of the 7:30 a.m. opening price rejection nestled with that PD array. Timed stops. Yeah, so I have some a little bit more complex models. I do use time-based entries and time-based stops as well, with different types of models and different trades. Sometimes I will trade time just on its own, not even price. I will just trade time itself. But yeah, I mean that's a whole nother lesson. Yeah, NBait, absolutely. So those are high probable windows. So between 9:23 and 9:45, let's mark that out, okay? Let's see if we can just, right now, let's just look at it. So 9:23 and 9:45. What do you know? When does this turtle soup happen? It's not by chance, right? These are times that I've studied extensively. That's why I share it. Now, it doesn't mean that, those time levels that I share with you guys, these high probable turtle soup time levels that I share with you guys, doesn't mean you're guaranteed a turtle soup during that time window. However, if you do see a turtle soup happen within that time level or time interval, and you have confluence to take it, it's very high probable, right? With context, exactly, with context. Now, if you don't know the time intervals I'm talking about for turtle soups, you can go to my X account, go to the highlights page. The highlights page has different trading models. That's why I have it as highlights. And you just click the highlights tab, and you can see I have it listed for you guys. If you're in Kingline, it's just under the turtle soup page. But you can see that there's certain windows during the times of day that you can see high probable chances of getting a turtle soup. This is one of them. So exactly what I'm teaching, Ram. You can see it after, right? However, you have to have the key components to make up that turtle soup. And that's that opening price, those opening time levels on the chart, paired with the PD array, right? You need at least both of those confluences together. And then your third and fourth confluences is there liquidity I can target? And then where are we delivering from on higher time frame? Okay. So this is something you can take in real time, knowing that you have the 7:30 a.m. opening price nestled with this PD array. And there's a 5-minute SIBI here, right? Does that make sense? Same with New York Midnight Open right here. I can take this turtle soup based off this 1-minute SIBI nestled with it. It's inside of it, right? It gives me a high probable turtle soup here. Is a lunch setup because it opens me. Yeah, I mean, I haven't looked into it that way, but that is similar to how I use 13:30. Yeah, 1:30 p.m. opening price. Like I said, that's, I feel like we take this, a trade right around this almost every day on stream. With PM open. You get that. It's a very high probable pivot level, and you could use as a turtle soup level, like that. Now you say, okay, well, what PD array do you have here? Well, you have this, right? Okay, well, that's like, okay, I don't want to have my stop. That's too high of a stop, JD. Like, what am I going to do? Okay, well, there's two other ways you can use it. Do you have an inverse around here? Yeah, you do, right? What does price do? Comes right up, soups PM open, and tags that inverse. right? Like I said, I'm only using inverses or fair value gaps paired with time levels. Okay, so you could use this. That's your nestled PD array. You could stop out in a couple different ways depending on your risk tolerance and your sizing. You can stop out with a close, candle body close above PM open, or this inverse failing. Or if you have higher risk tolerance, you could still allow this SIBI to work, but I wouldn't do that. I would have closed above PM open here, right? But yeah, I just can't stress enough the importance of having multiple points of confluence of the opening price of those time levels and the PD array nestled within them, being in line with higher time frame order flow and having targets below, specifically LR, some of the best targets, right? I kind of went through a lot kind of fast, but this is at least the foundation and the framework behind, you know, every single turtle soup that you see me take on a live execution. You know, if you're not in king line, you see those on X. This is exactly the framework I'm using. I stream. I stream every day. Some days I stream the AM and PM. Some days I stream just lunch and PM. Kind of varies on the day, but what percent of my trades are turtle soups? Probably, I don't know, 70%ish, right around there. Otherwise, I trade very specific inverse for value gaps. Every once in a while, I'll trade a 2022 model, but not often. There are certain times I don't trade. I don't really care a lot for 11 to 12 o'clock, or 11 to 11:50, this time window here. If you'll notice, most days, 11 till 11:50, right around that, you see a lot of time distortion. What's up, Tyrant? I know, huh? Yeah, you know, this time of day, I don't usually touch it. But besides that, yeah, I don't usually trade the open too often. Every once in a while, you know, you know, there's high probable setups I will, like these. But usually I'll wait for 9:53 to print. So I'll trade 9:53 until, you know, closing bell. I love the closing bell. I love the end of day here. And we caught this on stream today as well. We caught this short here. Oh, wait, where was it? It was here. This short. Are you able to say what kind of ROI you are on track for year to date? I don't know my exact like RR or you know, I don't keep track of my RR. I have shared my live account inside Kingline. I kind of try to keep that stuff kind of public, but yeah, it's doing pretty well. And you have to understand that win rate. You know, people ask me all the time, "What's your win rate?" Well, you know, I have no idea. My win rate changes all the time, but win rate is not something you want to base much off of, because you can have a 90% win rate and be unprofitable. Okay, you can have a 33% win rate and be profitable, because you know, you have to kind of flip trading on its head. When people ask what's your win rate, well, you can have a 90% win rate. Let's walk through that. Let's say you have 5 days of $200 profit, right? And you have 90% win rate. You're looking great. Okay, well, on day 6, what happens? You lose $4,500, right? So you make 200 5 days in a row. Win rate's looking amazing. Or let's take it a step further. You have a whole month of 0 losing days, right? Every day you're either making $100, $150, $500, whatever. Not a single losing day. The very last day of the month, you know, $7,000 loss. It's all gone. Wipes it all out, right? Versus, yeah, exactly. See what TTT's saying, right? Yeah, but you could, you know, vice versa. So you want to flip it on its head. Most people will risk $4,500 to make $200 on the day. You need to flip that. You need to risk 200 to make 4,500 or whatever, right? It's really important that you cap your downside, but don't cap your upside. You know, It's you kind of got to do the things do it opposite of how it's pretty much talked about online. If you want the truth. Now, is that fun? It's not fun because it sucks hitting a daily loss limit, a personal daily loss limit, and being done with that account. That sucks. It's not fun, right? It doesn't feel good. But it allows you to have uncapped upside, and your downside is capped. Like I told people before, like it was like on the last podcast. Man, if I would have given myself in my early trading career a max loss that I cut myself off with uncapped wins, man, I would have been rich way quicker, right? I would have been a way more profitable trader way faster instead of having to grind out 5 years of turning profitable. Because if you cap your losses, you're only going to lose that amount, right? Good question, Brendan. Do I take profits or just let the trade ride to TP? So I do things also pretty unconventionally. Now, if you're in Kingline, you know how I do this, but okay, so let's just use this New York Midnight Open soup, for example. Let's say I souped right here, right? So I entered here. So here's my short entry. Let's say my target is 953 root, okay? So here's my target. I want to run this LR just like the live executions I was just showing you guys. Okay, I want to run this LR. That's my target, and then my final target is 953. So what I'll do, let's say I took 5 contracts short. Maybe I'll trim a couple off here at this first low. Okay, and then I'll maybe trim the other 2 or 3 off when I hit my final target, and I'll leave one runner on, like 1 contract, sometimes 2 contracts or something. Now, when I leave a runner, I'm not leaving a runner to my final target. My final target's already been hit, okay? There's no point for me to leave a runner for my final target. I want to hit my final target with at least, half or more of my position size. However, if I can leave the runner on my final target, and let's say it wants to go lower and it does want to, push through these key levels, what I can do is, I call this on stream, I use house money. I call it using house money. I take that contract that I have left, and I wait for this 953 root, for example, to be invalidated, and then I will average up. So I will add more shorts now to my runners. Bring let's say my fill was here. Now my fill is going to probably be after averaging up maybe here, right? After we lost 953. So I'll just add using house money, and I put my stop at break even. Anytime I average up, I immediately put my stop at break even, right? And that allows me to basically either break even on the runners, no harm, no foul, or because I averaged up with the house money, right, I now have potential for these runners to turn into, a higher size trade. Maybe now I have 3-4 contracts back on, and now I get this move, right? Did that make sense? A lot of people will do the opposite. They will trim it off and just leave a runner for the final target. That you do that. That's, I guess you can do that if you want. However, that you're leaving some money on the table doing that, right? Versus if you try to leave on at least half your size for your final target, leave the runner just for kicks, and then you can now use that, if you get that continuation, to average up, and you're using house money now. You're not using drawdown. You're using, profit you already have. That's a good question, Mike. To be honest with you, man, one of my biggest struggles was my stubbornness. My early trading career, I got really lucky. Okay, some people know this story, but my first year of trading, I would say the first 6 months, I got really lucky. Dumb luck, right? Beginner's luck. I didn't know, how difficult trading really was yet, right? And I did really well. In fact, I made 100K my second month trading options, completely through luck. Needless to say, 2 weeks after that, it was gone. Okay. Now, because of my stupidity and my stubbornness early in my trading career and not understanding the right psychology of trading, I would not want to cut losers. So cutting losers was a huge mental break for me that I had to get through. Now, so I would say, like, a lot of times I would get caught like a deer in the headlights. The trade would go against me. I'm like, oh man, like, I just don't want to take the loss. So I was stubborn. I wouldn't cut it, right? Now, what you learn over time is cutting trades is actually gives you freedom. Okay? When you are okay with cutting a trade and accepting that you're going to have to stop out sometimes, you're going to have to understand that if you really want to be profitable and you really want to make money trading and you really want to do this long term and you don't want to keep running on the hamster wheel, that you're going to have to cut losses and you are absolutely going to have to take losses. There's no way around it. Okay? You're guaranteed losses. So knowing that, you have to make peace with that. And if you make peace with that, when a trade goes against you, you just cut it. People see me on, you guys see me on stream. If I'm wrong, I just get out, just cut it, right? Because I know that my models are high probable. So even if I take that little cut, a little paper cut, I'm gonna catch the big move. You know, at least once or twice that day, I'll catch a really good move. Now, if I wasn't, if I was too stubborn and I didn't cut that loss, well, what happens? The trade just keeps getting more and more red, right? And now I'm digging myself this big hole, right? So it's really imperative that you just already go into trading knowing that you're going to take losses and just accept them. And it's when you do take those losses and you just take them on the chin like a man, it kind of gives you freedom. You're like, it's not so bad, right? It's really not so bad to take a loss because you'll realize that when you zoom out bigger picture, your winning trades will make up for it as long as you didn't hesitate cutting those losses or you didn't break your rules and hold way past where you're supposed to, right? If I took this turtle soup and this inversed, I would just cut it. I would just cut it right away because I know that the next trade I take, I'm going to make, there's a high chance that if this inverse and, I lost 9 points, my models usually deliver much more than 9 points, right? But if I didn't cut this and I was stubborn, I'm like, I don't want to cut it. I'm seeing red. It's scaring me. Whatever. Okay, now all of a sudden it's 30 points, right? And now what do you do, right? Now you're in a hole, and now you're potentially entering negative expectancy. Yeah, Rainy, you can use turtle soups on any time frame. Absolutely. If you switch time frames. You can use classic turtle soups, higher time frames, right? You can even use them as confluence, like when you get these highs that are all souped. Again, what's the, this high was souped here on the 15-minute time frame, but what's the key component to this turtle soup right here? It's not just any high, right? It's not just this high. There's something else in this picture here that's telling me that this might be a nice turtle soup on the higher time frame. And that key component is this PD array. Because these highs are nestled within this PD array, right? Yeah, Mike. That's, dude, it's understandable, man. We all go through that. We all, people say you shouldn't have any emotions in trading or whatever. Well, I don't know about you guys, but I'm a human being. I have emotions, and it's not about not having emotions. It's not about being a robot. I see those quotes like, "Oh, I win or lose. It's just business." Well, I don't know. I disagree. I think that we're humans and we have emotions, and you always have to, tame that beast, right? You have to learn to control them. It's not about just being a robot, right? So you have to win that war in your mind, and you have to already make peace with just knowing that it's okay to take a loss. That's just the most important factor. My stop losses aren't always 9 points. It just varies per trade. I would say on average, my average stop loss, if I had to just guess, my average stop loss is probably 15 points. 12 to 15 points. Sometimes less. If I feel like I don't like a trade, sometimes I'll just get out, But I usually use the chart to tell me when I'm wrong. So instead of a straight point system, it's more so, okay, if I take this turtle soup at midnight, and I have this PD array here, I'm going to assume that this is going to work until this PD array tells me I'm wrong, right? And if that gets inverse, I just get out. So I'm letting the chart guide me here. Yeah, A-trade, exactly. Cool. Best weeks in the month to trade. I mean, your first week of the month is NFP week, right? And that one's usually pretty difficult. But NFP week, I don't mind NFP week that much. I mean, it could be difficult, but you just have to know going in that NFP week is going to engineer liquidity. So you're going to get a lot of highs and lows that aren't taken, and kind of that liquidity starts to get engineered. So NFP week, like first week of the month, I tend to target candle bodies instead of highs and lows. And those that are in king line, they know that. Instead of me, like, if I was long from here to target midnight or whatever, instead of me targeting this wick on NFP week, I'm targeting this candle body instead. And that usually offers a much more high probable target during NFP weeks. But I would say like third week of the month is usually really nice. Yeah, that's another one, not over leveraging. If you're over leveraging, especially on turtle soups, it's not the time to over leverage. You guys see, you can have really nice trades with lighter leverage that actually allow you to let the trade play out. Because if you over leverage a turtle soup or any trade, it doesn't matter what kind of trade it is, you over leverage that trade. Well, now it's going to be hard for you to actually let the chart tell you if you're wrong or not. Because if you over leverage a trade and you're in the least bit of drawdown, and you're in like 6 minis or something, and you're in 5 points of drawdown, you're already starting to sweat. You're like, oh man, Versus if you're in 1 mini, or if you're in 5 micros, or whatever it might be, 3 micros, you can actually let the chart tell you when you're wrong, right? You can actually let the trade and the model play out, right? If you're over leveraged, it's hard to let a model play out because you're sweating any type of drawdown, right? Yeah, exactly, Gap Trader. It's totally doable. So, any other questions, guys? This was just like a pretty casual, brief rundown of how I trade turtle soups and what I look for high probable turtle soups. Just to recap, it's the key time levels of New York Open, 7:30 a.m. opening price. It'll be here in the Discord. I'll make it free so you can watch it. The 7:30 a.m. opening price. Midnight open, so New York midnight open. Again, these are all New York Eastern. 1:30 p.m. open, right? And then the DTT routes of 9:53, 10:34, 12:35. Those time levels paired with PD arrays. Most important factor there. And then again, additional confluence, just to recap, you want to have some sort of targets, right? Low resistance liquidity, other key levels to target. Yeah, all times are Eastern time. Anytime you guys see me talk about time, like on X or anywhere, I'm referring to Eastern time. So does anybody else have any other questions? I'd be happy to talk through them. Otherwise, that was pretty much it for today. Awesome, Mike. Well, appreciate that, man. Yeah, I'm always here to help. Even if you're not in Kingline, you can hit me up on X. See if anybody else has any other questions. Nice, Knox. I'll hit you up. Yeah. Again, turtle soups, you don't have to take the soup itself, but you can watch for the signature with these key time levels, you guys. It's very imperative you understand this. You don't have to take the soup. If you see this reaction, New York Open, SIBI, you can use an entry model, right? Cool, Entity, yeah, man. Feel free to hit me up too. I'll check those out. You probably went over this, but you take trades at 12 a.m. open if it looks good, right? Yeah, I trade off midnight every single day, all the time. Midnight open is my favorite trade, all day long. I use midnight open over and over again. I also use it as a pivot level. Over trading and over leveraging as a newbie. Well, just go into it immediately knowing that you shouldn't over leverage, right? That's very important. Over trading, you want to make sure you're sticking to criteria. So a lot of times, if you take a loss or whatever, the human brain wants to just make that money back. Maybe you take subpar trades. Maybe you chase trades. Maybe you see your setup. Like let's say you saw this New York Open soup or Midnight Open soup, and you missed it, and you know, by the time it's already down here, you're like, oh man, I missed the move, and you impulse into the shorts, right? And then you get stopped out on this run, and then it dumps, right? So you want to make sure that to prevent over trading, you're actually using models and you're actually using criteria that you're looking for to play out, right? When you see that criteria, then you strike. Parvays, you're going long right now. Speaking of TMSO, what did we just get here? This stuff happens all day long, guys. OTE, I don't use OTE myself, but doesn't mean it doesn't work. I think OTE can be a very nice model. But I myself just use, you know, time. But yeah, OTE can be really nice, you know. If you use OTE, you can pair it with other things. You know, use OTE. Maybe you can take this a step further and build your own model out of it, Brendan. If you really like OTE trades and you're an OTE trader, okay, pull your OTE fib out and see if you get New York Midnight Open, right? Or New York Open or 953 nestled right there with that OTE somewhere. And if you see that, now you just added yourself a whole new tool in your OTE toolbox, right? If you're looking for an OTE short and you see that New York Midnight Open is right in your OTE zone and you see a PD array aligned with it, you now have additional confluence. If that makes sense, Brendan. Yeah, you know, just throw it in your toolbox, man. Like I always tell people, I share all my models. Like I love sharing trade. I could talk about time, price, the algorithm for hours. You know, you have to shut me up. I always talk too much. My classes are always too long. I'm really passionate about trading, but it doesn't mean you don't have to use the exact same models I use. You don't have to trade the exact same way I do. However, I would love, you know, it makes me happy when people take maybe parts of my models and they enter them into their own models as like new tools, right? It's just new tools in your toolbox. Because there's lots of ways to trade. You know, my way is not the only way. You know, there's people that use EMAs. There's people that use, DR ICT. There's people that just use plain ICT. There's people that just use time only. Like there's all sorts of ways to trade. Right? You just want to build models with additional points of confluence. High impact, no different, Greg. No different. High impact news days, I trade the exact same way as a no news day. I look for the exact same signatures and price. Everything I'm sharing here. Yeah, Ben, absolutely. You know, you can throw the 3-minute PD arrays. You know, I do like the 3-minute chart quite often. Let's check it out. You know, we can answer that question right now, Ben. Let's see. You know, New York Open, that turtle soup, you have a 3-minute PD array right here to use, right? Same with that Midnight Open. 3-minute PD array, right? Throw them on the charts. PM Open, here we go. We have this 3-minute SIBI right here. In fact, I think on stream I marked this SIBI out. This 3-minute SIBI here. Right? So you can, you know, if you're bearish and you see this rejection of PM Open, that 130 opening price, you can tell that price is going to remain bearish until that 3-minute SIBI is broken through, right? You lose that 3-minute SIBI, you don't want to try to short this anymore. Yeah, time's all fractal. It's all fractal. So, you know, any time frame you throw on the chart, you can find these signatures. 1 hour chart, turtle soup, 1 hour PD array nestled with that time level, these equal highs, right? I mean, you can pick and choose, but you know, if you want to get creative or go down the rabbit hole, throw New York Open on your charts, go find any random day on TradingView, 7:30 a.m. opening price, draw the line all the way out, take your midnight opening price, draw the line all the way out, and experiment, see what you find. See what you find. A SIBI is essentially just a bearish fair value gap, TMPA. So SIBI would be a, You know, I always tell people like SIBI, S, sell, BISI, B, buy. So bullish, you know, bullish fair value gap is a BISI, bearish fair value gap is a SIBI. Yeah, exactly. It's just an easier way to say, you know, instead of me having to say the whole bearish fair value gap, I just say SIBI. That's all. Any other thoughts or questions, guys? You bet. In fact, there's high probable times during London that you can see these soups happen. That's on my X account, just under the highlights tab. But same principles apply. You know, if you're looking to take turtle soups and you want to have that nestled PD array at any key time level, especially with TMSO, you can use that all night long, all day and all night long, through London and through Asia. Yeah. All right, guys. Well, if there's no more questions, I think I'm gonna wrap it up. If you want a little bit more like deeper, you know, look into these models and stuff like that, you know, I welcome you to check out Kingline. You know, we go into this stuff every single day. But I hope that you at least found one helpful thing in this class. You know, there's one helpful little tool, little nugget that you can take into your trading and your back testing. Sure, Richie, what's up? Do you think when a gap is closed, that's one of the highest ways of changing direction? So I would say it can be, but you can also have inverses fail all the time, right? The key is, you know, I challenge you to look into this as well, the time levels. If you have a PD array that's inverse that has a time level nestled within it, that's when it becomes, you know, more high probable, at least in my opinion, at least into the next draw on liquidity. Like for example, let's just throw it in just randomly. Let's just look at this. All right, we have this bearish fair value gap, this SIBI. Okay. What happens here? This SIBI nestled with 953 gets inversed here with this candle, right? So price is obviously saying that it doesn't want to go lower yet, right? So when we see this, what we can look for is, okay, oh yeah, we took this long on stream. You guys remember this? We took this long. It got me out break even. But price was inversing this because it needs liquidity. It's going for this liquidity here, right? So this inverse can work until that draw on liquidity has been achieved, has been met, right? And then it can be, you know, then you got new setups forming. So key time level inverses are, in my opinion, more high probable than just any inverse. That goes with, you know, inverses with TMSO, any of the DTT routes, New York Open, Midnight Open, same thing. Like if we inverse a fair value gap with Midnight Open, like this SIBI gets inversed with Midnight Open, then yeah, now I'm looking for longs. In fact, I'd be looking for turtle soup longs. If we inverse this, I'd be looking for that, right? So now we have Midnight Open acting as a pivot level to turtle soup to the upside because of this inverse PD array. If that makes sense. Backtesting template, not sure what you mean by that, Greg, but you know, I would just recommend, like I said, just throw these time levels on your chart and look at what price does when they're nestled with PD arrays. And I can't stress enough the importance of looking for low resistance liquidity to run as well. A lot of my trades are to target low resistance liquidity. It's one of my favorite trades, you know, especially off, you know, turtle soup. But yeah, any other questions? I've had a long day on the computer. I think I've streamed plus been on the computer for about 8 hours now. Nice, man. Let's go. Sure, Entity. I will check those out. I'll check those out, man. For sure. Yeah, mouse down. And my head's going to explode. But, yeah, I hope class was helpful. Again, if you want to dig deeper, you can even just, if you do a free trial in Keyline, you'll have full access to all the mentorship videos. You can even pirate them and download them if you want. I don't care. I'm here to help. But if you want to trade live with me, that's where I'm at. Alright, guys. I am going to bounce. I hope that was helpful. Feel free to hit me up anytime, anywhere. And I invite you to check these things out on your charts. Watch them play out in the market. Look at previous days and see what you can come up with. So, all right, I'm out. Have a good night, guys.